Chartereds, can you all hear me? If yes, thumbs up. Now friends, today we are supposed to do redemption of preference shares and redemption of debentures. We start with redemption of preference. Now friends, what is redemption of preference shares? Redemption of preference shares means repayment of preference share capital back to the preference share holders. Repayment of preference share capital back to preference share holders. We will give our preference share capital back to the preference share holders. Correct? When we issue preference shares, the journal entry is bank to preference share capital. When we are redeeming, that means we are repaying back, that means the journal entry is preference share capital to bank. But we break this journal entry. When we issue preference shares, the journal entry is bank to preference share capital, that means we got the money. When we are redeeming, logically the entry should be preference share capital to bank, but this entry we break into two parts. What are those two parts? Those two parts are chartered preference share capital, premium on redemption of preference shares to preference shareholder. Preference share capital account debit, premium on redemption of preference share account debit to preference shareholder and preference shareholder to bank. Correct? So this entry we say it is payable, due wala entry, and this is chartered paid wala entry. This is payable and this is paid. Correct, incorrect? Correct. Now, so preference shares, redemption of preference shares. Redemption means repayment of preference share capital back to the preference shareholders. Now, as per Companies Act, preference shares must be redeemed within a period of 20 years. As per Companies Act, preference shares must be redeemed within a period of 20 years. Now, one more thing. Section 133 of Companies Act, which gives us two types of companies. The companies which are covered under Section 133, the companies which are not covered. Companies which are covered under Section 133 are listed companies and they follow Ind AS. Now, the companies which follows Ind AS treats preference shares as liability. Therefore, premium on redemption of preference shares should be subtracted from divisible profits and not security premium. But the companies which are not covered under Section 133 are unlisted companies and which follow AS. The companies which follows AS, they treat preference share as capital. So, premium on redemption of preference share should be subtracted first from security premium. If security premium is not sufficient, then we subtract it from divisible profits. That means chartered this preference share PRPS, that is the extra money we are paying to preference shareholders. 100 rupees ka preference share, we are paying them 105. That means 5 rupees extra which we are paying them is known as premium on redemption of preference share. ये समझा कि नहीं समझा? This extra money which we are paying is loss to us. This loss chartered should be subtracted from either divisible profit to PRPS or security premium divisible profit to PRPS. That means if the company is covered under Section 133 and it follows Ind AS, that then we will use divisible profits. So if the company is covered under Section 133, we will use divisible profits. If the company is not covered under Section 133, that means they treat preference shares as share capital, and in such a situation, premium on redemption of preference shares should be first set off against security premium. If security premium is not sufficient, then we are supposed to set it off against divisible profits. Correcta, incorrecta? Correcta. I hope this much is clear. Yes, no. So premium on redemption of preference share is a loss. That loss should be set off against divisible profits if the company is a listed company or covered under section 133. Such premium on redemption of preference share is a loss. That loss should be set off against security premium first and then divisible profits if the company is not covered under section 133. Sir, oh sir, if examined nothing is mentioned whether it is covered under section 133 or not covered under section 133, what do we assume? We assume that the company is covered under section 133 and hence we use divisible profits. So we use security premium only if it is mentioned in the question. The question states security premium should be used, or if the question states the company is not covered under section 133, then we can use security premium or divisible profits. Otherwise, we will always use, yes, divisible profits. Am I clear? Yes or no? Yes, sir. Now, my wonderful chartered accountants. Now, wonderful chartered accountants. Now, chartered. So, this we have done. Redemption of preference share is governed by section 55 of Companies Act. Section 55 lays down 3 conditions. Condition number 1, only fully paid up preference shares can be redeemed. That means partly paid up preference shares cannot be redeemed. Partly paid up matlab, suppose it is given in the question preference shares of rupees 100 each, rupees 70 paid up. Preference shares of rupees 100 each, rupees 70 paid up. Can they be redeemed? No. Sir, but I want to redeem them. Then you have to first make those preference shares fully paid up and then redeem. Then first you have to make those preference shares fully paid up and then redeem. Okay. So only fully paid up preference shares can be redeemed. If preference shares are partly paid up, it cannot be redeemed. If you want to redeem partly paid up preference shares, then first you have to make them fully paid up. Sir, how do we make them fully paid up? By making a call. Share call to share capital, bank to share call. Am I clear? That means 30 rupees you will call, you will receive the money and then make the preference shares fully paid up. After you make the preference shares fully paid up, you can redeem. Second condition, preference shares can be redeemed either at par or at premium. That means if nominal value of preference share is 100 rupees, you can repay them back either 100 or more than 100. You cannot repay them back less than 100. So 100 rupees ka preference shares, you can return them 100. You can return them more than 100. That means you can give them 100, 102, 105, 107, 110, anything. But you cannot repay them back 90 rupees. 100 rupees ka preference share and you decide I will return them only 90. Nah. That means redemption at discount is disallowed. That means chartered redemption at discount is disallowed. Correct, incorrect? Correct. Shall we move ahead? Yes, sir. Now chartered. Now, chartered. Shall we move ahead? Yes, sir. Third condition. Due to redemption of preference share, total share capital of the company will reduce. Yes. Due to redemption of preference share, total share capital of the company will reduce. Suppose equity share capital 1000, preference share capital 500. Therefore, total share capital 1500. Yes. If you redeem preference shares, then equity shares will remain 100. Preference shares you have redeemed, so it will become 0. So total share capital will become how much? 1000. So can I say due to redemption of preference shares, total share capital of the company will reduce? Yes. Such reduction of share capital is disallowed. Oh, yes, such reduction of share capital is disallowed. So whenever your share capital reduces because of redemption of preference shares, then chartered you are supposed to either make fresh issue of equity shares. That means it has reduced by how much? 500. So either you make a 500 rupees ka fresh issue of equity shares or 500 rupees ka fresh issue of preference shares or create 500 rupees ka reserve which is known as capital redemption reserve. Am I clear? Due to redemption of preference shares, total share capital of the company will reduce. Such reduction in share capital is disallowed. So if your share capital has reduced by 500, then you are supposed to make a fresh issue of share capital of 500, whether equity or preference, or you are supposed to make a reserve of 500. That is 500 rupees ka CRR. CRR means capital redemption reserve. Sir, oh sir, एक बात बताओ sir, tell me one thing. My share capital reduced by 500. I make a fresh issue of equity shares of 300 and I create CRR of 200. That means 500 ka reduction mein 300 I cover by fresh issue of shares and 200 I cover by creating CRR. Is it allowed? Yes. That means due to redemption of preference shares, total share capital of the company decreases, and such decrease should be filled by either CRR or fresh issue of shares or both by CRR and fresh issue. That means little CRR, little fresh issue allowed. Correct? Yes, sir. Now, chartered, one more thing I'll ask. Suppose you redeem preference shares of 1,000. Suppose you redeem preference shares of 1,000. Correct? So, you have to create, there is a capital gap of how much? 1,000. Capital has decreased by how much? 1,000. This 1,000 you have to fill up? Yes. Now, you made a fresh issue of shares of 300. You made a fresh issue of shares of 300. So, your share capital decreased by 1,000. Against that 1,000, you made a fresh issue of shares of how much? 300. So, still there is a remaining how much? 700. That 700 ka CRR you should create. Am I clear? Yes or no? Understand this. Preference share capital I redeem by 1,000 rupees. And then I do bank to share capital 300, 300. That means my share capital decreased by 1,000. Yes. Then because of fresh issue, my share capital is increasing by 300. Yes. Therefore, net decrease in share capital is how much? Net decrease in share capital is how much? 700. So, I have to create CRR of 700. Correct? Therefore, CRR ka journal entry will be what? 2 CRR. You are creating a reserve of 700. This 700 ka reserve you will create from where? Divisible profits. Which profits? Divisible profits. Am I clear? Yes, sir. Therefore, can we say CRR is nothing but nominal value of preference shares redeemed? In my example, 1,000 minus fresh issue of shares. In my example, 300. Therefore, CRR will become how much? 700. Correct? Yes or no? Yes, sir. Nominal value of preference shares redeemed minus fresh issue of shares minus what value of fresh issue? Paid up value of fresh issue. Paid up value of fresh issue including paid up value of fresh issue excluding security premium. Oh, that means 10 rupees ka preference shares I am issuing at 12 rupees. I will consider paid up value 10. Correct. You will include paid up value but not security premium. Sir, why we will not include security premium? Because security premium is not a part of share capital. We are doing all this to cover share capital. No, is security premium part of share capital, bacha? No. So, will we take security premium? No. So, what did you understand? Sir, I understood that if there is a redemption of preference share, total share capital will decrease. Such decrease is not allowed. So, with whatever amount share capital has decreased, you are supposed to make a fresh issue or create CRR or both. Hence, we can say that CRR is equal to nominal value of preference shares redeemed minus paid up value of fresh issue of shares. This paid up value should be excluding premium. Correct? And this fresh issue of shares can be equity shares or preference shares. Correct? Why we are not including premium? Because we are creating CRR to cover share capital. We are creating CRR to cover the decrease in share capital, and security premium is not a part of share capital. Am I clear? Yes. And the journal entry for creating share CRR is divisible profits to CRR. Divisible profits means GRRDP. Divisible profits means GRRDP. G means general reserve, R means revenue reserve or retained earnings, R means reserve fund, D means dividend equalization fund, and P means PL credit balance appearing under the head reserves and surplus. G means general reserve, R means revenue reserve or retained earnings, another R means reserve fund, D means dividend equalization fund, and P means PL credit. Correct? Yes, sir. So, how to calculate CRR? CRR is equal to nominal value of preference shares redeemed. CRR is equal to nominal value of preference shares redeemed less paid up value of fresh issue of shares, paid up value excluding security premium. Journal entry is divisible profits to CRR. Correct? Now charted. Steps to solve. Steps to solve the question. Step 1, calculations. How many things you are supposed to calculate? Minimum 2. What are those 2 things? Number 1, how much premium on redemption of preference share, and number 2, CRR. So over here calculation mein minimum 2. One is premium of redemption of preference shares and number 2 CRR. This you are supposed to calculate. Then you are supposed to pass journal entries. And then you are supposed to prepare balance sheet as per revised schedule 3. Calculations may PRPS, that is calculation of total number of preference shares redeemed into premium per share. CRR, the formula. If there is a bonus shares in the question, we will calculate bonus also. Am I clear? Yes sir, no sir. Yes sir. Now charted. Now charted. So calculation के बाद journals. Now charted, there are 6 journals. How many? 6. First, you are redeeming preference shares, so you require money. So first you will arrange money. Why you are redeeming preference shares, so you require money, no? From where will you get? You will first arrange money by making issue of shares, issue of debentures, sale of fixed assets, sale of investment, uncalled capital called up, recovery of calls in arrear, share forfeiture and reissue. By any which ways, you will first arrange money. Okay, sir. Then you will create PRPS, divisible profits or security premium. Security premium should be used only if the company is not covered. Otherwise, only divisible profits. Then CRR ka journal entry. So first is arranging of money. First is arranging of money. Second, PRPS. Okay, sir. Third is CRR. Fourth, payable. Okay. Fifth, paid. Okay. And sixth, bonus issue. Okay, sir. First is arranging of money. Second, PRPS. Third, CRR. Fourth, payable. Fifth, paid. Sixth, bonus shares. Am I clear? Yes. Arranging of money. How you can arrange money? Sale of fixed assets or investment. Fresh issue of shares, which is also known as issue of right shares. Acha. Share call, say you can ask money if the shares are partly paid up. Share call to share capital, bank to share call. If there are some people who did not pay calls in arrear, some ... who did not pay calls in arrear, you can recover calls in arrear, bank to calls in arrear, or there is share forfeiture and reissue. Am I clear? Now charted. Let's understand. Balance sheet of Bhavna Limited as at 31st of March 2017. Balance sheet of Bhavna Limited as at 31st of March 2017. Issued 500 11% redeemable preference shares of rupees 100 each, 9,000 equity shares of rupees 10 each, reserves and surplus, my security premium, general reserve, PL account, current liabilities, fixed assets and current assets. Correct? Yes, yes, yes. Now, the company decided to redeem preference shares at a premium of 5%. The company decided to redeem preference shares at a premium of 5%. Preference share is of how much? 100 rupees. You are planning to redeem at a premium of 5%. If you are planning to redeem at a premium of 5% chartered, that means 100 rupees ka preference share mein 5 rupees premium you are supposed to pay. 100 rupees ka preference share mein you are supposed to pay 5 rupees premium. Premium on redemption of preference shares. Okay. A fresh issue of 1,000 equity shares of rupees 10 each at rupees 12. This is fresh issue. Why did you do fresh issue? It will give you two advantages. Advantage number one, you will get money, no? So can I say this is arranging of money? Yes. Second advantage, it will help you to create lesser CRR. It will help you to create lesser CRR. Now, all investments were sold for how much? 27,000. All investments were sold for how much? 27,000. Investment is worth how much? 28. You are selling it for how much? 27. So 1,000 is loss. You are required to give journal entries including those relating to cash. How many preference shares are there? 500. You are redeeming at a premium of 5. So 500 into 5 is your PRPS? Yes. 500 into 5 is your PRPS. So PRPS is how much? 2,500. PRPS first you will take from what? Nothing is mentioned in the question, divisible profits. If the question says chartered, again I am repeating, if the question says that PRPS should be created or the company is not covered by section 133, then only you will use security premium. Otherwise you will create PRPS out of divisible profit. Otherwise you will create PRPS out of divisible profits. In this question, anywhere it is mentioned that the company is not covered under section 133, no chartered, it is not mentioned. So we create out of general reserve. General reserve money you have? Yeah, tons of money, 20,000. I want only 2,500. Then CRR. Nominal value of preference shares redeemed. How many preference shares you are redeeming? 500. So 500 shares into 100, 50,000. Correct? Yes. Paid up value of fresh issue excluding premium. Paid up value of fresh issue excluding premium. How much is the paid up value? 1,000. Excluding premium 10. So 1,000 into 10 is how much? 10,000. So 50,000 say your share capital is decreasing because you are redeeming preference shares. Plus you are making a 10,000 ka fresh issue, so your share capital is increasing by 10. Your share capital is decreasing by 50 because you are redeeming preference shares of 50,000. Plus your share capital is increasing by 10. Why? Because you are making a fresh issue of equity shares of 10. So ultimately your share capital is decreasing by how much? 40,000. So you will create CRR of how much? 40,000. CRR you will create out of which profit? Divisible profit. Divisible profits mein GRR DP. So first which reserve you will use? General reserve. Do you have money in general reserve? Yes. How much money you have in general reserve? Sir, 20,000. But out of this 20,000, 2,500 you have already used in security premium. Out of this 20,000, 2,500 you have already used in PRPS. So how much general reserve is left? Sir, only 17,500. Exactly. So general reserve you will take 17,500. So out of 40,000 if you take from GR 17,500, that means 40,000 minus 17,500, there is still a shortage of how much? There is still a shortage of chartered 22,500. That 22,500 you will take from where? Another divisible profit. Which another divisible profits you have? Ayyo Rama, only one, PL account. So remaining 22,500 you will take it from PL account. Am I clear? Yes, sir. Now journal entries. Arranging of money. 6 journal entries. Number 1 is arranging of money, PRPS, CRR, payable, paid. Arranging of money, PRPS, CRR, payable and paid. Arranging of money. How you will arrange money? Sir, I am arranging money by making a fresh issue of equity shares and by sale of investments. Wonderful. So there are two ways chartered you are arranging money. By fresh issue of shares and by sale of investment. Fresh issue of shares. How many shares you are issuing? 1,000. 1,000 into 12. 12,000 bank account debit to equity share capital to security premium. This 12,000, how did you get? 1,000 shares you issued at rupees. This 1,000 shares you issued at rupees 12. Then 1,000 shares you issued at nominal value 10 and security premium में 1,000 into 2, 12,000. Am I correct? Yes? No? Yes, sir. Now chartered. Then you sold your investment. Investment of 28,000. Investment of 28,000, you sold it for how much? Investments was sold for 27. Ayyo Rama, 28 ka investment, you sold it for 27. That means 1,000 ka there is loss. So 28 ka investment, you sold it for 27. Bank account debit 27,000, P&L account debit 1,000, to investment 28,000. 28 ka investment sold for 27, bank account debit 27, loss 1,000 to investment. Correct. Then second is PRPS. How much is PRPS? 2,500. From where will you take? GR. So entry will become GR to PRPS. Correcta, incorrecta? Correcta. Thereafter you will create CRR. How much ka CRR you are creating? 40,000. But 40,000 ka CRR you are creating 17,500 from general reserve and 22,500 from P&L account. General reserve, PL to CRR. Then payable, preference share capital, PRPS to preference shareholder, 500 into 100 nominal value, 500 per 5 rupees premium, and you are supposed to pay per shareholder 105. So 500 shares ko you are supposed to pay 105. So total payable is 52,500. 500 shares ko you are supposed to pay 105. 100 rupees for nominal value and 5 rupees for premium. 100 rupees for nominal value, 5 rupees for premium. Therefore, you are supposed to pay 105. Yes, sir. No, sir. Yes, sir. Then you paid it, preference shareholder to bank. Then you paid it, chartered, preference shareholder to bank. Yes, sir. No, sir. Yes, sir. Shall we move ahead? Haan, sir. No, 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 no. Now, chartered balance sheet. Preference shares to gone, equity shares 9,000 were already there, plus 1,000 fresh issue. So equity shares became how much? 10,000. Security premium 10,000 was already there. Plus fresh issue, say you got 2,000, so 12,000. General reserve 20 you had in your balance sheet. General reserve 20 you had in the balance sheet. 2,500 you have used it for PRPS and CRR ke liye 17,500. Okay. PL you had 25. Yes. 1,000 you used it for loss. And 22,500 you used it for CRR. So you are left with 1,500. And there is a new reserve by the name of CRR. So this is your reserves and surplus. Cash and cash equivalent. Old bank balance is how much? 93. Old bank balance is, 20,000. So 20,000 bank balance you already had. Plus because of fresh issue you got 12 and sale of investment, so you got 27. So 20 you had, 12 you got from sale of fresh issue and 27 you got from sale of investment. So this is the total money which you have and you paid to preference shareholder 52,500, so 6,500. Yes sir, no sir, yes sir. Understood? Yes. Rest all you copied from balance sheet only. Except these three values, whatever was there in the old balance sheet, that you copied it. Now, chartered, SK Limited had 1 lakh equity shares of rupees 10 each. Rupees 1 lakh equity shares of rupees 10 each. That means 10,000 equity shares you had. And 8% 1,000 redeemable preference shares of rupees 60 each. 1 minute. See, now this sum will do. The books of D Limited showed the following balances on 31st December. 30,000 equity shares 10 each fully paid up. 18,000 redeemable preference shares of rupees 10 each fully paid up. 4,000 10% redeemable preference shares of rupees 10 each 8 paid up. So can you redeem this? No. You cannot redeem. Why? Because they are partly paid up. Until and unless, listen to this line carefully, until and unless the question says all preference shares are redeemed, then you will make these partly paid up shares fully paid up and redeem them. Okay, sir. Over here, undistributed reserves mein PL account you have got 80, general reserve 120, security premium 15 and capital reserve 21. Preference shares are redeemed on 1st January 2014 at a premium of 2 per share. 2 rupees premium. How many preference shares you will redeem? 18,000. This 4,000 preference shares you will not redeem. Kaiku? Because they are partly paid up. Whereabout of 100 shares of rupees 10 each are not known. Oh. That means out of 18,000, 100 preference shareholders are not known. So you will make payment only to 17,900 preference shares. Okay, sir. Thereafter, at this 3,000 equity shares of rupees 10 each were issued. This is fresh issue of equity shares to generate money, arranging of money. At the same time, which time? When you made a fresh issue of equity shares, at that same time, you made a bonus issue for 2 shares for every 5. So you made fresh issue of equity shares and bonus issue simultaneously. So will you give bonus issue to fresh issue? No. So bonus issue will be given to original 30,000 equity shares only. Bonus issue will not be given to fresh issue. Why? Because bonus issue and fresh issue are at the same time. But if fresh issue is first and bonus issue is later on, fresh issue is first and bonus issue is later on, then you will give bonus issue both to fresh issue as well as old. Suppose both were not at same time, then you would have given bonus shares to this 30,000 plus 3,000. 33,000 ko you could have given bonus shares. Am I clear? Yes, sir. Now, PRPS, 18,000 shares you are redeeming at a premium of 2, that is 36,000. 36,000 you are supposed to give it from divisible profits. Divisible profits may be first preferences general reserve. PL, GR is how much? 120. So from 120 you will take this 36. Then CRR, nominal value of preference shares redeemed. How many preference shares you are redeeming? 18,000. 18,000 is of rupees 10 each. Plus you are making a fresh issue of equity shares. 3,000 equity shares are issued at a premium of 10%. 10% matlab 1 rupee premium. But are we interested in premium when we are calculating CRR? Are we interested in the premium when we are calculating CRR? Na bapu na. So 3,000 into 100. 30,000. CRR is equal to 1,50,000. General reserve 84, PL 66. So why general reserve 84? Now beta, general reserve in the balance sheet is how much? Sir, 1,20,000. Out of that 1,20,000, how much you have already used? 36. So 1,20,000 minus 36, you are left with only 84. So 84 you used it from general reserve. There is still a shortage of how much? 150 minus 84 is my shortage. That means shortage is 66. That you will take from another divisible profit, that is PL account. Correcta, incorrecta, correcta. Yes or no? Yes, sir. Now my wonderful chartered accountant. Now, CRR ho gaya. Bonus shares. Bonus shares, 2 shares for every 5. For every 5 shares, we will get 2 shares. So 2 by 5 into how many shares were, equity shares were there? 30,000. Fresh issue of equity shares will not get bonus shares. In this question or all question? Sir, in this question. In remaining question, you will not take only 30. You will take 30 plus fresh issue, 33. In this question, why are you not taking? Sir, in this question, bonus shares and fresh issue are at same time. So how can we give bonus shares to fresh issue also? Wonderful. So we will give bonus shares to original. So For every 5 shares, you are giving 2 shares. For 30,000 shares, you will give how many? 12,000. 2 by 5 into 30,000. 5 1 ja, 5 6 ja, 6 1 ja, 6 2 ja, 12,000 shares, each of rupees 10. So you are giving bonus shares of 1,20,000. Bonus shares के लिए you require reserves? Yes. Which reserve you will use first? CRR. CRR is not there. Security premium. Security premium is not there. Capital reserve. Capital reserve is not there. Divisible profits. So first CRR, then security premium, then capital reserve, then divisible profits. But mind, this should be realized in cash. If it is not realized in cash, you cannot use. Correcta, incorrecta? Correcta. Now, arranging of money. How are you arranging money? I am arranging money by making a fresh issue of 3,000 shares of rupees 10 each at 10% premium. 10 rupees ka share, 10% premium with 1 rupee premium. Now, so shares are issued at 11 rupees. 3,000 into 11, 33,000. Security premium में 3,000 into 1. Equity share capital में 3,000 into 10. Okay. Then PRPS, how much PRPS? 36,000. From where? General reserve. General reserve to PRPS. Then CRR 120, general reserve से 84, PL से 66. General reserve से 84, PL से 66. 84 plus 66 is how much? 1,50,000. Payable, preferential capital 18,000 into 10, PRPS 18,000 into 2, to preferential holder 18,000 into 12. Correct? Paid, preferential holder to bank. But 18,000 ko you did not make payment. You made payment only to 1,79,000, sorry, 17,900 preferences. Sir, once again, you are redeeming 18,000. But you made payment only to 17,900 preferences. Kaiku, because 1,000 preferences chartered accountant are not traceable. 1,000 preferences chartered accountant are not traceable. So how many are traceable? 17,000. So 18,000 minus 100, 17,900 ko you paid, 2,14,800. Then bonus issue. Bonus issue ka 2 journal entry. Reserves to base, base to equity share capital. Reserves to base, base to equity share capital. Sir, what is base? Bonus to equity shareholders. So reserves to bonus, bonus to equity share capital. Correct? These bonus shares cannot be issued at premium. Correcta, incorrecta? Correcta. Now, na 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 na. Ninna na ninna, ninna ninna, ninna na ninna, ninna ninna, ninna na ninna, ninna ninna, ninna na ninna. Now chartered. Suppose, listen to this very carefully. CRR is equal to nominal value of preference shares redeemed minus fresh issue of shares minus paid up value of fresh issue of shares excluding premium. If chartered paid up value of fresh issue of equity shares is not given in the question, then what will you do? 0. If there is no fresh issue, then this will become 0. Yes. But story may twist. There is a twist in the story. What is the twist? The question says we have issued equity shares, but we will not tell you how many equity shares are issued. Oh. So if the question says there is a fresh issue of equity shares, but number of shares issued is not given in the question, then what you will do? Then chartered, you have got 2 options. Option 1, option 2. You will check that is bank balance after redemption of preference share is given in the question or not given in the question. That means we say bank balance given, bank balance not given. If bank balance is given in the question, then we prepare bank account. Opening balance, okay. Issue of equity shares, say you get money. Sale of investment and fixed assets, say you get money. Then you make payment to preference shareholders. And closing balance is also given in the question, because I told bank balance after redemption is given, not given, given. But chartered, they will not give you this. So this will become balancing figure. What they will not give you? Equity shares. So in this entire opening balance will be there. Sale of investment fixed asset will be there. Paid to preference shareholder will be there. Closing balance is also given in the question, but they have not given how many shares are issued. So this will become balancing figure. Oh. Now suppose chartered, bank balance is not given. Then chartered, we will calculate maximum CRR. Maximum CRR. How to calculate maximum CRR? CRR is created out of divisible profits. Yes, you will take all divisible profits. From there you will subtract PRPS. Okay. Any loss on sale of investment or sale of fixed assets. If there is profit on sale of investment or sale of fixed asset, then you will add it. If some divisible profit you want to retain, that means you want to continue to them in use balance sheet, that you will subtract. So this is the maximum divisible profit available for creating CRR. You cannot create CRR more than this divisible profits. Yes, again I repeat. CRR is created out of divisible profits. So if divisible profits are 1 lakh, can you create CRR more than 1 lakh? Chance illa. So first you take total of all the divisible profits. From there you subtract PRPS, because PRPS is also taken out of divisible profits. Yes. Then loss on sale of fixed asset, add profit on sale of fixed asset. Okay. Yes, sir. Then some divisible profits you want to retain and continue in the balance sheet. So out of suppose 1 lakh, I tell you 20,000 divisible profit you cannot use. That means we can use how much? 80,000. That means 80,000 is the maximum CRR we can create. Yes. Now in this formula, nominal value of preference shares redeemed. I know. Yes. Paid up value of fresh issue of shares. This I don't know. CRR. I know. Then chartered, this will become balancing figure. Fresh issue of shares. Oh, yes, sir. Now chartered. So when number of shares, when number of fresh issue of equity shares is not given in the question, but they have told that there is a fresh issue, then chartered, what will you do? Then chartered, first you will check whether closing bank balance after redemption is given or not given. If it is given, then you will prepare bank account to find out number of shares issued. Bank account, opening balance, closing balance, sale of investments, amount paid to preference shareholder, balance is equity shareholder. But chartered, they have not given closing bank balance also. Then you will calculate first maximum CRR. Total of divisible profits less PRPS, loss on sale of investments or investment, divisible profits which are retained, this is the maximum divisible profits. This you put it in the formula of CRR and balancing figure will become fresh issue. Correct, chartered? Yes or no? Yes. Now look at this question. Look at this question. See over here it is given. Preference shares are to be redeemed at a premium of 7.5%. In order to facilitate redemption, the company had to sell investment to finance part of the redemption from company's fund. Premium on redemption was met out of security premium. PRPS is met out of security premium. It is given in the question clearly. That means not covered. The company is not covered under section 133. That means For PRPS, we can use security premium. To issue sufficient equity shares. Ayyo, sufficient means how many? At a premium of 1 per share to raise the balance of the funds. That means equity shares are of 5 rupees. Yes. You are issuing at a premium of 1 rupee. That means you are issuing at 6 rupees. But how many shares you are issuing at 6 rupees? That they have not told. Minimum bank balance to be retained. That means bank balance after redemption of preference share is given. Okay, so we will do first method. The investments were sold, the equity shares were fully subscribed and the shares were fully redeemed. Correct? Yes. 9% preference shares, 6,500. Equity shares, 45,000. General reserve, PL, creditors, fixed asset. Now charted. First calculation. PRPS. 6,500 shares you are redeeming. You are redeeming at a premium of 7.5%. If you are redeeming at a premium of 7.5% chartered, that means 7 rupees 50 paisa you are giving extra. Yes. 6,500 into 7 rupees 50 paisa, that means 48,750 you are giving extra. From where will you take that? Security premium. Why? Because question says premium on redemption was met out of security premium. That means company is not covered under section 133. That means company is not a listed company. But sir, to set off PRPS against security premium, we should have security premium. No. Balance sheet mein security premium is not there. Balance sheet mein security premium is not there, so what? But there is a fresh issue of equity shares. Yes. They are issued at a premium of 1 rupee. Yes. From here we will get security premium. No. That we can use. No. Yes. If that security premium is not sufficient, then we will use it from CRR. Sorry. Then you will use it from divisible profits. So let's wait. Now let's find out how many equity shares are issued. How will we find out? By preparing a bank account or maximum CRR? Bank account. Opening balance of bank is 67,500. Investments are sold at how much? 2,60,000. So we got money. There are 6,500 preference shares ko we are redeeming at 7.5. That means 6,500 preference shares ko we will give them back 107.5. 100 rupees nominal value, 7 rupees 50 paisa premium. So we will repay them back 107.5 by preference shareholders. 6,500 into 107.5. This is the money we are paying. Bank balance after redemption is how much? 10,500. The balancing figure comes to 3,81,750. Balancing figure means credit minus debit. Correct? Now chartered. That means by issuing equity shares, this much money we got. Okay. Each shareholder paid how much? 6 rupees. So how many shares we issued? 381,750 divided by 6 rupees, 63,625 shares we issued. 63,625 shares we issued, chartered. क्लास 12 में है क्या सीए पेपर दे सकते हैं? Now chartered. Correct? Now chartered. Nominal value of preference shares redeemed. 6,500 preference shares are redeemed. Nominal value is 100 rupees. 6,500 into 100, 6,50,000. Say your share capital will decrease. Fresh issue. 63,625 into 5. Paid up value of fresh issue excluding premium. So your CRR is 331,875. From where will you create? Over here they have told minimum reduction was to be made against general reserve. So general reserve we will use later. PL we will use first. How much PL we have? 260. Yes. From 260, 275 ka investments you sold it for 260. Yes. So investment mein there is a loss of 15. That loss of 15 you will subtract it from 260 ka PNL. Yes. So 260 ka PNL, 15,000 loss on sale of investment. So PNL left is how much? Sir, 245. Correct. 275 ka investment, you sold it for 260, thereby giving you a loss of 15,000. That loss will reduce your PL balance of 260. Your PL balance is of 260. 15,000 ka loss. That means chartered, you have only PL balance left of 245. Balance you will use it from CRR. So 331,875, 245 PL balance is from general reserve. Correcta, incorrecta? Correcta. Then the life is same, arranging of money. You are arranging money by selling investment and by fresh issue of shares. How much premium you got? 63,625. This premium you will use to set off PRPS, because the question says use the security premium to write off premium on redemption of preference shares, and we had discussed that means the company is not covered under section 133. That means we can use this. Correcta, incorrecta? Correcta. Now, chartered, now, correct? Yes. Now, in this question, capital structure of the company, यहाँ पे देखो, capital structure of the company 6,000, 6% preference shares of 100 each fully paid up, and 2,007% redeemable preference shares of 100 each 75 paid up. So one is chartered fully paid up, one is partly paid up. Logically we cannot redeem partly paid up, we can redeem only fully paid up, but over here it is given all these preference shares were redeemable on blah blah blah. If all are redeemable, that means this 6,000 is redeemable as well as 2,000 is redeemable. This 6,000 is redeemable as well as this 2,000 is redeemable. If 2,000 ko we want to redeem, if we want to redeem 2,000 preference shares chartered, then first we have to make that 2,000 shares from partly paid up to fully paid up. 75, so 25 rupees we need to call. Then we can redeem, okay, preference shares 100, 1 lakh equity shares 10. It was decided to redeem both the class of preference shares. Company issued for cash so many but no more. So many but no more means, it sounds like Shakespearean English. So many but no more. So many but no more means I want so much food that it can not be more than my hunger. That means sufficient to fill my tummy. So many but no more means sufficient equity shares of rupees 10 each at par, necessary to provide for redemption of preference shares which could otherwise be redeemed. These equity shares are fully paid up. All steps were taken. Oh my God, they have not told us what is the closing bank balance after redemption. Chartered, if they have not told us what is closing bank balance after redemption, then what we should do? Maximum CRR. So first, how many preference shares are redeemed? 6 plus 2, 8,000 preference shares are redeemed. 8,000 preference shares are redeemed at a premium of 5%. 100 rupees ka preference shares you are redeeming at a premium of 5%. That means 5 rupees is your premium on redemption of preference share per share. 5 rupees is premium on redemption of preference share. 8,000 preference shares you are redeeming at 5 rupees premium, so 40,000 you require PRPS. PRPS first you will take out from where? So divisible profit. Which divisible profit first? So general reserve. General reserve is there in the balance sheet? No, only one reserve is there. 2,40,000. So everything will come out from that 2,40,000 only. Okay. So we took out from 2,40,000. Then maximum CRR. Maximum CRR is all divisible profits. How much divisible profits we have? PL only, 2,40,000. From that I subtracted 40 PRPS, so we are left with a divisible profit of 2 lakh. Now chartered, we are redeeming preference shares of 8 lakhs. And we can create a maximum CRR of 2 lakhs. We are redeeming a preference shares of 8 lakhs, but we can create maximum CRR of only 2 lakhs because divisible profits are of only 2 lakhs. Although divisible profits we have is 2,40,000, But out of that 2 lakh 40 we are using it for PRPS. So the divisible profits available for CRR is only 2 lakhs. Therefore, we cannot create CRR more than 2 lakhs. Preference shares are redeemed 8 lakhs. CRR creation 2 lakhs. That means my wonderful chartered accountant, how much ka fresh issue? 6 lakhs. See, nominal value of preference shares redeemed 8 lakh. Maximum CRR 2 lakh. Therefore, paid up value of shares is 6 lakhs. Correct? Then same, bank to share capital, arranging of money. Then make the partly paid up preference shares fully paid up because they were 2000 shares which were partly paid up. 2000 shares of 7% were partly paid up. So how much money we have to call? 25 on how many shares? 2000. So share call to share capital, bank to share call. Then PRPS, PL to PRPS, PL to CRR, payable 6% preference share, 7% preference share, PRPS to preference shareholder. Then paid, preference shareholder to bank. Correct? These are all the varieties of redemption of preference share chartered. Now we will take 10 minutes ka break and then we will start redemption of debentures. Am I clear? Yes? No? Yes, sir. Now chartered. A chartered. Redemption of preference debentures. Redemption of debentures. Redemption of preference shares means repayment of preference share capital. Redemption of debentures means repayment of debenture holders or repayment to debenture holders. That means redemption basically means if we have taken a loan and when we repay them back, that is known as redemption. Correct, incorrect, correct chartered. Shall we move ahead? Yes, sir. Now, redemption of debentures, that means we have to repay debentures. We can repay debentures either in cash or by equity shares. If we are redeeming debenture holders by equity shares, then first we pass payable entry. Debenture account debit, PRD, premium on redemption of debenture to debenture holders. Whatever is the amount payable to debenture holders, we find out that divided by issue price as the number of equity shares issued. For example, a company had issued 20,000 13% debentures of rupees 100 each. The debentures are due for redemption on 1st July 2012. The terms of the issue provided that they were redeemable at a premium of 5%. They were redeemable at a premium of 5%. Now chartered, and also conferred to the debenture holders to convert 20% of their holding into equity shares nominal value at a price of 15 per share. At a price of 15 per share. That means chartered, we have given debenture holders option. What is the option? That we will redeem them at a premium of 5%? Yes. Option 1, either they can take 100% in cash. Option 2 chartered, convert 20% of their holding into equity shares and that equity shares will be of 15 rupees and balance 80% they can take in cash. That means two options. Option 1, take full cash. Option 2, make 20% equity shares, 80% cash. The equity shares which we are giving, that we will give them at 15 rupees. That means 10 rupees ka equity shares at 15 rupees, 5 rupees premium. So total debentures are debentures holder holding 2,500 debentures did not exercise the option. That means they said no equity shares, full cash only we want. Then what we will tell them? Fair enough, whatever you want. Correct. So 20,000 debenture holders made 2,500 debentures want cash only. That is 2,500 into 105, 26 lakhs, 25,000 we will give them in cash. Balance 17,500. We are supposed to pay 105. That means we are supposed to pay them 18 lakh 37,500. Out of this 18 lakh 37,500, 80% will give them cash. So 80% of 18 lakh 37,500, that is 14 lakh 70,000 will give them in. 14 lakh 70,000 will give them in cash. Remaining 20% is how much? 3 lakh 67,500. That 3 lakh 67,500 will give them in equity shares. Equity shares of rupees 15. So how many equity shares will give them? 2 lakh 45,000 shares. 3 lakh 65,000 divided by 15 will give them 2 lakh 45,000 equity shares. Now if I want to pass a journal entry, how will I pass? Which percent debentures? 13% debentures. 20,000 into 100. 20 lakh. One, two, three, four. Premium on redemption of debentures. minute. 2500 into 105, 2,62,500, and this is into 105, 18,37,500 into 0.8, 14,70,000, 3,67,000. This is 1 lakh. To debenture holder, 21 lakhs. So we are supposed to pay debenture holders 21 lakhs? Yes. B. Debenture holders 20,000 into 105. 2. Bank. How much cash we will give them? We will give them cash of 14 lakh 70,000 plus 262,500. 17 lakh 2. Equity share capital. How many equity shares we are giving? 24,500 into 100. Into 10, 2,45,000 plus 245 plus 1732. Correct? So first we have to find out amount payable divided by issue price 15 rupees, that will give you number of shares. So when we are giving number of shares is 24,500 equity shares of 10 rupees, that is 2,45,000, and 24,500 into 5, that is 1,22,500. Correcta, incorrecta? Correcta. Now charted, one more thing. When debentures are redeemed by cash, chartered, that time we are supposed to create DRR and DRRI. How much DRR we are supposed to create? 10% of debentures. And how much DRRI we are supposed to create? 15%. DRR should be created by divisible profits to DRR, and DRRI is bank, DRRI to bank. DRR is debenture redemption reserve and DRRI is equal to debenture redemption reserve investment. Am I clear? So chartered, DRR and DRRI we are supposed to create if we are redeeming at cash. How much DRR? 10%. How much DRRI? 15%. Now let's read. A company must create DRR and DRRI. DRR is 10%, DRRI is 15%, PL, that is divisible profits, to DRR, and DRRI to bank. Who will create DRR and DRRI? Unlisted company has to create both DRR and DRRI. Debenture redemption reserve and debenture redemption reserve investment, both. But if it is a listed company, we are supposed to create only DRRI. Unlisted company should create both DRR and DRRI. Listed should create only DRRI. Yes sir, no sir, yes sir, no sir, yes sir, no sir. When and how to close DRR and DRRI. Now, we are doing this DRR and DRRI for what joy? For the purpose of redemption. So, as soon as redemption starts, we are supposed to close them. Now, chartered, before redemption starts, we require money. Yes, so we will sell DRRI. Sell DRRI, bank to DRRI. Then we will redeem debentures. Achha. As soon as the debentures are redeemed, we close DRR. How? DRR to general reserve. Okay. And then close PRD. So I call it SRCC. What is SRCC? Sell DRRI, redeem debentures, close DRR, close PRD. Sell DRRI, redeem debentures, close what? Close DRR, close PRD. Second, why are we creating DRR and DRRI? We are creating DRR and DRRI so we have money at the time of redemption. Sir, once again, we are creating DRR and DRRI so that we have got money at the time of redemption. So that means if we are doing redemption by conversion into equity shares, we don't require money. If we don't require money, that means we should not create DRR and DRRI when we are doing redemption by conversion. Correct. That means DRR and DRRI should not be created on convertible portion, should be created only on non-convertible portion. Correct? Yes. DRR and DRRI should not be created on FCD, fully convertible debentures, and proportionate DRR and DRRI should be created on PCD, partly convertible debentures. Proportionate means DRR and DRRI should be created only in that part of debentures which are redeemable in cash, that is non-convertible portion. For example, there are 15% debentures of 3 lakh. 40% is convertible. Yes, so we will create DRR and DRRI on 60%. 60% of 3 lakhs is how much? 1 lakh 80. 1 lakh 80 ka 10% is DRR. 1 lakh 80 ka 15%, that is 27,000 is DRRI. So, DRR should be created 10%, DRRI 15%. Fair enough. DRR ka journal entry PL to DRR, DRRI ka journal entry DRRI to bank. Correct. Unlisted company should create both DRR and DRRI. Listed company should create only DRRI. At the time of redemption, we are supposed to close them. So, redemption ka process becomes, first you sell DRRI, then you redeem debentures, then you close DRR, and then you close PRD. But why do we create DRR? To get money at the time of redemption. So, if we are converting debentures into equity shares, we don't require money. So, DRR and DRRI should not be created on convertible portion. That means DRR and DRRI should be created only on non-convertible portion. For example, total debentures are 3 lakhs. Yes. 40% is convertible. That means 1 lakh 20 will get converted. Yes. 1 lakh 80 ko we are going to pay cash. Yes. Therefore, we should create DRR and DRRI only on 1 lakh 80,000. Yes, sir. No, sir. Yes, sir. No, sir. Yes, sir. Now, chartered, this sum. Libra Limited, a listed company, recently made a public issue in respect of which the following information is available. ठीक है? Number of partly convertible debentures issued are 2 lakh. Partly convertible. 2 lakh debentures of face value and issue price 100. That means 100 into 2 lakh, 200 lakh ka nominal value. Convertible portion is 60%. That means out of 200 lakhs, 60%, that is 120 lakhs will get converted. Yes. Remaining 40%, that is 80 lakhs will be redeemed in cash. Yes, sir. Therefore, we should create DRR and DRRI only on that 80 lakhs. Yes. Sir, repeat once again. Total debentures 2 lakhs. Yes. 2 lakhs into 100. Total is how much? 200 lakhs. Correct. We should create DRR and DRRI only on non-convertible portion. Yes. Out of that 200 lakhs, 40 lakhs is convertible. Sorry, 60 lakhs is convertible. Yes. That means 120 lakhs is convertible. Yes. That means we should not create DRR and DRRI on that 120 lakhs. Yes, sir. Redemption by cash is how much? Sir, 40%. Convertible 60%. That means redemption by cash is 40%. That is non-convertible. 40% of 200 lakhs is how much? Sir, 80 lakhs. So, we should create DRR and DRRI only on 80 lakhs. Yes, sir. But, sir, we understood what? Sir, we will not create DRR, we will create only DRRI. Brilliant. But how do you know that? Sir, because it is written Libra Limited is a listed company. Listed company will create only DRRI. Brilliant. So again, DRRI you will create on total? No, sir. 60%? Yes, sir. 40%? No, sir. Why? Sir, 40% is convertible. No DRR and DRRI. 60% is non-convertible, redemption by cash. So we should create DRR and DRRI. But in this question, since it's a listed company, we'll create only DRRI. How much DRRI you will create? Sir, 15%. 15% of what amount? Sir, 15% of 80 lakhs. 15% of 80 lakhs is how much? Sir, 15% of 80 lakhs is 12 lakhs. Very good. 60% of 200 lakhs, 120 lakhs on the expiry of 6 months from the date of closing issue. That means we'll convert them into equity shares after 6 months from the date of closing issue. Date of closing issue is 1/5. So, May, June, July, August, September, October. 31st October ko we will convert. Yes, sir. 1/5 plus 6 months is 31st October ko we will convert. 1/6 date of allotment, 1/5, 1/6/2021 date of closure of subscription is 1/5/21, date of allotment is 1/6/21. So when does the issue close? 1/5. When do you allot debentures? 1/6. Rate of interest is 50%. Payable on the date of allotment, payable from the date of allotment. ठीक है. Debentures 2 lakh. Interest payable on 30th September. अच्छा, from the date of allotment. Date of allotment is how much? 1/6. So first interest when you will pay? Sir, first interest will pay on 30th September. June, July, August, September. June, July, August, September. 4 months का interest you will give. Correct? Then 31st October को you will convert debentures. Yes. That is after 1 month. Yes. So make sure that before conversion you give them 1 month ka interest. Yes. Then on 31st of March, those debentures which are not converted will get 6 months ka interest. Yes. So 30th September ko you will give 4 months ka interest to all the debentures. Yes. 31st October, since the conversion takes place, entire October ka debenture interest you will give to those debentures which are getting converted. They should get no before conversion. September tak ka interest I got. Yes. Because till September chartered you gave interest to everybody. Yes. Then 30th September to 31st October is 1 month. After 1 month, so I will not be debenture holder. No, I will become equity shareholder. But for October, so I was debenture holder. So October ka interest I should get, I should not get. You should get. That means 1 month ka debenture interest company will pay to those debentures which are converted. Then on 31st of March, again you will pay to all debentures which are not converted. That means out of 120 lakhs, out of 200 lakhs, 120 lakhs got converted. Yes. So on 30th September ko you will pay debenture interest on 200 lakhs. Correct. 1 month ka debenture interest to 120 lakhs which got converted. Yes. And 31st March ko which did not get convert 80 lakhs for full 6 months ka interest. Yes. You are supposed to pass journal entries for the year ended. So full year. Let's see full year mein what happens. 1/5 को issue, 1/6 को you will allot. As soon as you allot, you will create DRRI. 30th September को 4 months का interest. After 1 month there is conversion. Then 31st of March को debenture interest to 80 lakhs for entire 6 months and transfer all interest to PL. Fair enough? Yes. See, first we are issuing debentures, bank to debenture. Debenture application to debenture. This is closing and this is allotment. You are allotting the debentures. Then you will create DRRI to bank, 15% of non-convertible portion. It is 12 lakhs. Then 30th September ko you will pay interest to all 200 lakhs into rate of interest 15% for 4 months. June, July, August, September. June, July, August, September. Now, thereafter chartered 31st October को conversion is going to happen. 31st October को conversion is going to happen. तो 1 month का interest I will pay to which are getting converted 120 lakh into 15% into 1 month का interest. Yes. Then you will convert debenture to debenture holder 120 lakhs. Number of shares issued 120 lakhs को you are going to give equity shares of 60 each. Huh? Yeah. For the purpose of conversion, face value 10, you are going to give equity shares of 60 each. This 60 mein 10 rupees is nominal value, 50 rupees is security premium. Correct? Then chartered you convert debenture holder to equity share capital to security premium into 10. Then 31st March ko you will give debenture interest to remaining 80 lakhs. Then wherever debenture interest was there, 10, 1.5, 6. 10, 1.5, 6. Total 17.5, you will transfer it to PL. Why? Because it's an expense. You understood? Yes, sir. So chartered, this is the process of doing redemption of debentures. So always remember redemption of debentures may on the date of redemption, on the date of redemption, you will give them debenture interest. You will give them debenture interest up to the date of redemption. Earn interest on DRRI pay debenture interest up to the date of redemption, earn interest on DRRI up to the date of redemption, and then process of redemption. What is the process of redemption? Process of redemption is SRCC. S is sell DRRI, bank to sell DRRI, bank to DRRI. Then redeem debentures, that is debenture, PRD to debenture holder and debenture holder to bank. Then close DRR, that is DRR to GR. Close PRD. How will you close PRD? PL to PRD. Correct? Yes or no? Yes. Just before redemption, you will do A, arranging of money. How will you arrange money? Same way. The way we did it in redemption of preference share. Sale of fixed assets investment, issue of shares, issue of debentures, make partly paid up shares fully paid up, recovery of calls in arrear, whatever. Then, before redemption, you will check, is DRR and DRRI created or not created? If they are created, very good. If they are not created, create. So, first you will arrange money, correct? Then check whether DRR and DRRI is created or not created. If it is created, very good. If it is not created, you will create. Am I clear? So, logically, you are going to solve in two parts. Before, on. Before redemption, on redemption. Before redemption, arranging of money and checking. Correct? Yes. On redemption, pay debenture interest, earn interest on DRRI, and then process of redemption, that is SRCC. And remember, if in the question redemption is happening on the year end, balance sheet is given, then these two is not required. If in the question balance sheet is given, then this is not required. Correct? Yes. Now, chartered, if you ask me, this is before and this is redemption by cash. Correct? So, if balance sheet is given, chartered, these two things are not required. Am I clear? Yes, sir. Now, for that I have given steps to solve also. Arranging of money, legal provision, that is create DRR and DRRI, process of redemption, balance sheet. Yes or no? Yes, sir. With that we come to end of redemption of debentures also, chartered. Thank you so much. I want to share with you one very, very important thing. Now listen. Now, chartered, let's divide our syllabus . 1 minute. Now, first is paper pattern. Paper pattern, chartered. Correct? Question number 1, A, B and C. 1 A, B, C. See, this is from June, September, Jan, May, September. So, all the attempts of new syllabus has been covered. And if you can see, true and false, true and false, true and false, theory, accounting process, rectification, accounting process, inventory valuation, accounting process. So, chartered, 1A is true and false. True and false may chartered, it is 12 marks. Correct? Yes, sir. Then there is theory questions of 4 marks. Then there is a sum of 4 marks. First it is accounting process, then different chapter, then accounting process, then different chapter. So if you see now, accounting process, different chapter. Accounting process, different chapter. Accounting process, so this time there are chances there will be different chapter, any which ways. Correct? Yes. Then chartered, we say section A. Section A consists of all small chapters, that is accounting process, okay, bills of exchange, BRS, rectification of errors, depreciation and inventory valuation. This comes from section A. Section B. Section B, I call it big chapters. Final accounts, single entry and NPO. Correct? Yes. Section C, partnership. Section D, company. Correct? Okay. So this is your question 1, this is compulsory question. You have to attend. Now your first doubt is from where to study this 12 marks and 4 marks ka theory. In JKC book which JKC has provided you chartered, in that before every chapter some theory is printed. That theory if you read, you have true and false and theory questions both will be done, so you need not worry about it. Am I clear? Yes. Now chartered, question number 2. 2A, rectification, depreciation, BRS, bills, depreciation, BRS, rectification, BRS, depreciation. Oh, see, this entire section is from section A, 2A, 2B. So 2A, is also from section A, both together 20 marks. So section A say you will get 20 marks for sure. Yes, sir. Now, then chartered question 3A. 3A is NPO, final accounts, NPO, single entry. So 3A is always from section B. And 3B is always partnership, section C. Oh, see, 12, 8, 10, 10, 15, 5, 12, 8, 12, 8. So section B say you will get 10 marks minimum. And section C say you will get 10 marks minimum. Then chartered question 4. Question 4 A is partnership, B is again single entry, NPO single entry. So charted section B में A, B, that is from section C, section B. So section B also becomes 10 plus 10, 20 marks, and this also becomes 10 plus 10, 20 marks approximately. This is of 20 marks, this is of 20 marks. Now charted question 5. A, B, C. Sorry. A, inventory, NPO, depreciation, BRS. So generally, it is from section A. Second question, BRS, single entry, inventory, accounting process, final accounts. So again, section, this is again from section A or section B. And C is company. That is section D. Correct. This is again 20 marks. There will be, you have to do section A or B. Now charted, the advantage is one will be from section A, another will be from section A, chances are there. One will be from section B, another will be from section B, no. Both can be from section A, see inventory, final accounts. Section B, sorry, section A, section B. Section A, section A, section B. A, B, A, B, A. So if you do section A only over here, then you are fine. So I remove section. So section A or B करने के लिए you require section A. Yes. Correct. Yes, sir. Section D is company. Question 5. So section A से again ten marks. Correct? Yes. Then section 5, fifth question, company and theory everywhere. So section D, and this is theory. This is 15 marks. This is 5 marks. And generally charted, this is 10 and this is 10. So section, correct? Yes, sir. Now, so if you ask me, you cannot avoid any sections. Last time question number 2 was very difficult, but I can tell you section B and section C will give you 40 marks, that is 2 questions straight. This thing you cannot leave only. Now, 3 and 4, 2 questions straight. Now you are left with question 5, 6 and 2. 5, 6 and 2. Correct? Question 1 के बाद you are left with section 2, 5 and 6. If you do company accounts, then question number 5 and 6 you can do, but not completely. That means even if you leave all these questions, then question 2 you will not attempt, that is choice wala question gone. Yes. Remaining all questions you can attempt except 10 marks. So out of 125, 25 is from section A which is gone. So remaining 100. Remaining 100 में से question number 5 का one part you will not be able to attempt. Yes, that is 10 marks gone. Correct. So you will be left with 90 marks. So imagine if you do section B, C and D, you will be able to attempt 90 marks of the question paper. If you do section B, C and D, that is final account, single entry NPO, company and partnership, 90 marks ka paper you can attempt. But you cannot avoid section A. Why? Because chartered 4 marks and section A. So if you do section A okay also, then also chartered you can attempt in section A okay, B, C, D thoroughly. Section A, that is accounting process, bills, BRS, rectification, depreciation, inventory. If you do okay, you can still attempt 100 marks of the paper, leaving question number 2. And if question number 2 comes easy, then lottery. And last time question number 2 was difficult, so this time we are expecting question number 2 will be easy chartered. So I hope you got a clarity of how will be your paper pattern. Yes sir, section A is understood. Section B is single entry NPO partnership. Section C is company. So section C is partnership, section C partnership, B single entry NPO final accounts, and section D is company. Correct. Section A is small chapter, section B is single entry NPO final accounts. Correct? Yes sir. Now sir, is section B, C, D enough for us right now? B, C, D if you have done thoroughly, you will pass. That much I can tell you. But that does not mean you leave section A completely. This is expectation from what we saw. So if your section B, C, D is not strong, then passing only becomes difficult. So if your A is strong and B, C, D is weak, then problem. But if your B, C, D is strong and A is weak, no problem. But in any of the cases, I would not advise leave section A completely and go. Yeah, understood. B, C, D, if you do thoroughly, that means chartered, I can guarantee 75 marks to 80 marks of the paper you can thoroughly attempt. Oh, am I clear? Yes sir, no sir. Correct. That's all from my end. All the best. Thank you so much. Don't worry for theory and true and false. Just refer JKSC material ka starting wala part. That is enough and you will be done. Bye bye. Take care.